when you listen to market news, it's usually pretty dramatic in the short term. Either we have days that were really good or weeks that were really good, like we saw yesterday, or we have days that are really bad. On the days where the market doesn't move much, you just don't hear a lot of news. But yesterday I talked about the impact of missing the best days in the market and how dramatically your return diminished if you missed just the 8 best days in this year. Well, it'll be 9 now. If you missed the best 9 days, you missed a majority of the gains this year. So I hope that fear has not kept you on the sidelines this year. I hope yesterday's number doesn't make you so exuberant that you get all in all at one time, or that you make a knee-jerk reaction. But if you are out, you may be likely to stay out after you hear this news. So every single day you can find really positive news and you can find really negative news, because everybody has different opinions. So we have a chart to throw up on the screen today, and what we're looking at is the Dow Jones, and this is a really short-term technical indicator. It's called a death cross. A death cross is a technical pattern where short-term moving average, typically the 50-day moving average, drops below the longer-term average, which is the 200-day moving average. So you see that circled on the chart there. So this is appeared, and it's a very short-term technical indicator showing that the Dow could be poised for a correction. So the last time that the Dow witnessed a similar pattern was in March of 2022, after which the Dow decreased by 12% over the next 6 months. Now, the appearance of a death cross indicates a decline in short-term momentum and a trend toward lower prices. And that trend can sometimes last up to a year. So what do? The markets look like they're going up. The death cross says that the Dow may be going down. So what do? Well, you do the same thing that you did yesterday. You follow the strategy that you believe in. First, you got to know what you believe in. So don't alter your plans because the market is moving one way or the other. If the death cross is right, guess what? If you're building a portfolio, you're going to get a discount going in. If it's wrong, then you're going to still accumulate shares of companies to build a great long-term portfolio. And if statistics hold true, they don't always. History's not a guarantee of what's happened in the past is going to happen in the future, but it's really all we have to look at. So if we look at, 3-year, 5-year, and 10-year periods, we see that the longer that we go, the better chance we have of being positive and making gains.